was basically real estate because it is basically, just to put it in short, it's basically the best way to build your net worth. Um,
100%.
the thing about real estate is that the government actually protects just home. It has so many securities for homeowners. So like even if things go south, you can take housing forbearance. There's alternatives that you can just take so you can be able to protect just your income or just your investments. And that's like basically the number one. I would say this basically the gateway. I guess you could say towards security is real estate. It does grant you like certain returns, obviously with market appreciation, and then just the rental income that you get. Um, the I have looked into it, and I do actually know a lot about it because I have been looking into getting into that. But
Okay.
that's just like farther down the line because what do you call it? Something that I'm going to talk about today is called the options wheel, and I introduced it to a couple of people already. Like I talked about it to Wasim, and it's basically like getting rent from the market. It's like a more, how do I say, it doesn't require that much capital. It is fairly consistent as long as you do it correctly, and it's basically it grants you more like percentage returns wise, like for your investment, like. And when it comes to the size of your, I guess you'd say, however much capital that it is that you have, it grants you more percent back weekly because it's a weekly thing, than an actual, in a house does. And so that's something I'm gonna talk about today, or I just wanted to just show it to you guys. That way you guys could be able to just see, another alternative to, producing, whether it's, 50, $100 a week. I mean, that's still extra money in your pocket.
100%. 100%. Yeah.
Mhm.
And have you read yet? Because I remember last year, I don't know if you were in attendance or not in GCLA when I had David Osborne come speak, who's like one of the top people of all time, and like Keller Williams. And he's like personally was mentored and stuff by Gary Keller. And his net worth is about 250 million, maybe a little bit higher. Maybe it's closer to 300 million. But that's where he built everything. And so a lot of the whole Go Abundance entity, which I'm the director of the women's side, most of them are all real estate made. Like they're all multimillionaires or, more. Because of real estate, and even my personal mentor, Justin Donald, who has he's called the Lifestyle Investor. His book is actually coming out now, which I think you'll really like it, Eduardo, because all he has is like 10 commandments to investing. And he was like he was called the Warren Buffett of today. Like he was in Forbes magazine and they interviewed him and wrote an article. He's brilliant. He taught me how to run my Cutco office. He like mentored me back in the day, and he's a huge investor. But everything like when he's doing, he built his wealth. He started with mobile parks, buying mobile home parks. And so many years ago, like over a decade ago, he started buying mobile home parks, and he kind of made himself with that. He was on the news. I remember like 5 years ago, he was like interviewed about that, but he's built a huge wealth through mobile home parks. And then he's taken that cash flow and put it into so many things. And so he, multiplied his net worth by tens of millions of dollars in just a 3-year span, which was really cool to see, like over these last 5 years. And so a lot of the deals that I was telling you that I get the pre-made deals, and like he'll structure them because he's super big on like one of his 10 commandments is like, do I get money now? Like he wants money now and not just to wait till later, So like whenever he's putting money into a company, and he probably has the most diverse like portfolio that I've ever seen. Like it's just crazy how much different shit he has investments in, right? And so he owns like Dress Barn, he bought like clothing stores, like retail stores, like a lot of online companies that were going down, and like bought them out, and like they put everything online, put new systems, and kept it going with the name that it had. And then obviously mobile home parks and a bunch of different stuff in real estate, and like a lot of different things. I just went in with him on Pier 1. Pier 1 Imports was a deal that he showed me. He's like, if you want to go in, where there's a group of us that are going in on this. And so I went in on that. So like I always receive different deals of all kinds, all kinds. And then I have people, from him, and then I have people who are always throwing real estate deals at us. Like they're building right now. One of the guys, they're building a boutique, a distillery attached to a boutique, attached to a casino in Reno. And so we have a group of friends that are going in on that. So that's where I was saying, like, if you're ever interested in seeing any of those deals, to see if you want to go in on any of those things, I'm more than happy to share those with you. So I send them over typically to Kinnamore because I know that he's been interested. And that's something I wanted to open up to anybody. But obviously, capital's needed, right? And so this is a really good year to put away money. And then, like with what you're doing with the stocks, get cash flow and turn cash flow into more cash flow and not have money just sitting there, in your savings account, but have money that's actually making you money, to have cash because like market's going to crash, like real estate market's going to crash hopefully in the next year or two. I say hopefully because I like want to buy a lot of stuff. But
It is,
it's going to
what do you
happen.
call it? Statistics wise, because I read up on that, and it's suggesting that it will, or the housing market will
Yeah.
specifically.
So that's where I'm like putting away cash because I want to be able to buy homes, like some to flip, some to turn into short-term rentals, and have them for like Airbnbs, ideally in places that I want to be too, right? So like I'm looking at buying to get an Airbnb in Galveston, and I want to have that just for myself to use whenever we want to, and then Airbnb it, when we're not there. So that's something that we're going to be doing. But yeah, I'd love to. And I'm recording this. I know like people I'd wanted to be on, and then people are working and doing stuff, but I definitely wanted to hear more about what you've been doing because I know Spencer had talked about like giving you some money to play with because there's some stuff I'm just not going to put time into. A lot of my investments, I put money like into deals or there's a syndication and I just give them money and they do it. So I'm more of at this point, a passive investor. If we end up doing stuff with Airbnbs, we might be a little bit more active, like managing the Airbnbs. But right now, I don't really want to do much as an active investor. I want to be more passive. So that's kind of, where we're at. But I was very interested in hearing about what you've been doing. Super impressed to see you do that. And I love seeing young people who are thinking about that and really setting themselves up. So yeah, I wanted to hear more about what you've been doing. And then, open the door to you that if you want any of the deals, at least to see them, I can email them over to you, and if there's any specific kind of deals that you're like, I'm more interested in this or more interested in that, or, that I can definitely share those with you because we have big access to a lot of people, through my mastermind.
Yeah, so I definitely do want to start. What do you call it? Now, I do definitely want to look at those deals because I am like as same as you exactly. I'm actually just basically hoarding cash on the side right now just to see if what happens with this next coming year. Because if how do I say, if the housing market crash does end up happening, then I just want to be able to just be able to at least get my hand in as many deals as possible. And in the short term, I am gonna have to stretch myself thin, but I mean, it's gonna pay off, immensely in the long term. And so it's just like, I mean, right now I have a little bit. I have in my investments, I have about. Let me check. Hold on. Let me see. Yeah, I have about 52 grand, which it's a sizable amount for a 19-year-old. But I mean, it's still not enough to the point where it's like, okay, like I feel comfortable just being able to, I guess, just like I don't know how to put it, but in how I see it, it's basically I want to double down on what it is that I'm actually good at. And so I was just gonna double down on this, hopefully flip it within a year or two, at least flip it to like over 200K. And then that way I'm just set in stone, and then I can just start just throwing money. Well, not throwing money out the window, but throwing money at some other deals.
So yeah, good investments.
No, in good investments. And but
Yeah.
because
So yeah, dive in, start sharing stuff.
so let me see. I'm gonna go ahead and hop on it on my computer. That way you guys can be able to see it. So because the first thing that I definitely wanted to show you guys, because it doesn't take much to know about the market in general. You just, let me see, let me hop on. Wait, okay. Yeah, because the first thing that I was going to talk about is the options wheel, and I've actually talked about it to a couple people. And like I said before, it's just basically a way for you to just create passive income. All right, there you go. Okay.
Okay, cool. You're on your computer now?
Yeah, I'm on my computer. Let me see. Yeah, so it's basically options wheel. And it's basically a cycle in which it's just you're gonna rinse and repeat every single week. So, every Monday, market open, you want to take like 5 minutes outside your day and just go in and do this, and then you'll be able to collect your premium every
Is there
single
any
time.
way you could call in? Hey, is there any way you could call in and mute your computer? Use your computer for video, but call in
Okay.
from your phone because the reception sucks right now with the internet.
Okay.
I mean, keep talking. It's okay right now, but it was like you just sounded like a robot. And I heard Monday, market open.
Yeah, so basically how it works is that on market open on Monday, which, for here at Texas time, it opens at 8:30. Now you basically want to hop on and just, let me see, I'll post the link right now. That way you guys can be able to create y'all's brokerage accounts if you guys are interested, because they're doing a promotion right now. Where you actually get 4 free stocks just for signing up and just depositing $100. It was a lot better than when I did it. I didn't get anything. Shit, okay. But let me see. Let me go and post it on the chat. Okay, let me. Can you hear me? Okay, there you go.
Yeah, just mute and turn off the sound on your computer.
Okay. Yeah, so basically what I'm going to do again is let me just go ahead and post a link real quick. That way you guys can have it. All right, there you go. Yeah, so I'm going to go ahead and share my screen real quick. Let me see. Yeah, so basically, this is my Webull account. Oh, let me take that off. Okay, so basically all you do with this strategy is that you want to basically you want to first identify which stocks or which companies you wouldn't mind owning in the first place, because basically how it's going to go down is I am going to explain both the downside and the upside to this. So what I do traditionally with this option wheel is that I go to Tesla because I don't mind owning my Tesla. I have it in my long-term position stock portfolio. And basically all you do, it's basically, like I said before, it's the options wheel. It's not rocket science. And basically how it starts is you see the puts section. All you basically do is you have to sell a given put at a certain security or strike price. Sorry. At a certain strike price. And by doing so, you actually collect, by the end of the week, you'd actually be able to collect the full premium amount by the end of the week. So for example, at this portion right here, it's $2,300 because you actually had to multiply that by 100 because it's in options. I'll dive into that. I just want to go ahead and show you guys first. But as you can see here, it's 2.35K. So that's about the amount of premium that you would collect if I were to sell this call. However, here is the underlying thing about it. So the thing is, you can actually only do this if you have enough cash or capital to cover in the event that you do get exercised. And basically, what I mean is that, if you have $5,000 in your brokerage account, if you divide that 5,000 by 100, that means that you'd only be able to do this on companies that are under that price. So again, 5,000 divided by 100, take away two zeros. So that means that you'd only be able to do the options wheel for companies or securities that are under $50. And so with that, you want to go and look, because you want to get the most value for your buck, you want to go look for companies that have the highest, like, implied volatility ratios, that give a really good theta over time. And the reason why is because those are the ones that are going to give you more bang for your buck. So a good example that I would use for someone who's, just looking to get passive income is actually called Neo. And it's basically one of the biggest, EV manufacturers, electric vehicle manufacturers, in China. And so for their options are cheaper. Again, just reminding you guys, just multiply whatever number you see on the screen by 100, and that's the total amount of premium that you're going to be collecting over the course, of the entire week. And that's what you collect every single week. Sorry. And so for this
Okay,
one,
can you point to a number, give an example. What column are you looking at multiplying by 100?
yeah. So that was my fault. So where it says ask and bid, or the bid ask, that's basically what you're looking for. And so, but here what you want to focus on is simply the strike price. So in the very middle, there's a strike price. And like I said before, basically what happens is that, if you have $5,000 in your brokerage account, what you can do is just simply go to your puts. You're going to go to the puts, which is the right side. Remember, you want to keep it under $50. So you can sell any of these.
So anything under $50.
You can sell anything under $50 as long as you just sell something. So basically, for example, what we can do is just, like right here, let's say I don't think the stock's going to drop below $39. I'll explain the how do I say, what can happen after well, by doing this. But basically what you can do is, from selling this option specifically, you'd actually collect about $100 of premium, which, on a $5,000 investment, $100 might not seem the biggest, but it's better than nothing. So, it's just consistent income that's just extra, that you're not doing anything for. Just keep that in mind. And so something that I do definitely want to just talk about first is, so in the event, so the only downside to this kind of strategy, and this is why I say do this kind of strategy for a company that you don't mind owning, because if the company is just not a good company, then I highly suggest you don't do that, because it might actually just being unbeneficial for you, just to put it in, basic terms. But basically, Neo is a company that I see a lot of potential in, so you guys could definitely do that with this company. And what it entails is, let's say you sell the 40 strike price. What do you call it? Let's say you sell the $40 strike price put for Neo. Basically what happens with this now is, you need your security. If you do the math, all you do is do 40 minus the amount that you paid for, or that you sold the security for. So as you can see right here on the side, it's 137 is the limit price. If you do 40 minus 137, just off the top of my head, you get 3863, sorry, 3863. So what happens is, if this stock were to drop below 3863, you get what's called exercise. And when you get exercise, basically what it entails is you will be given 100 of the stock, like 100 shares of the stock, at the given strike price that you sold the put for. So let's say, let's say what happened is, basically, let me put it to you. So let's say this stock right now is at $43. So if by Friday, the stock ends up dropping below the price that I just told you guys, 38.63, I will get exercised and I will have to buy 100 shares of the stock at the $40 strike price. So when you hear that, you might think that it's a bad thing. But the thing about it is that this strategy is kind of like a never lose strategy, because if it's a company that you see a lot of potential in, if it has a future, then all it is that one, the price right now of this stock is at 43. So you bought it at 40. So one, the one of the good things about it is, one, you're getting it at a discount. And two, if you don't mind owning the company, it's a never lose kind of strategy, because you bought it at a discount. And if you see potential in it in the future, I mean, you bought at 40. And what if by the end of next week, this stock has done it before. I mean, it's pretty crazy. But if by the end of next week, it ends up going to $50, you bought it in at 40. So not only did you collect the premium, but you also, you're getting the added on benefit of getting that profit from the actual stock itself. I don't know if that made sense for you guys. Um,
100%.
yeah, okay, got it. Yeah, and after so let's say you do get exercised. So after getting exercised, what you can now do, and this is actually more profitable than selling puts. It's called cash covered puts. Than selling cash covered puts is actually a little bit more profitable, because you get the added on benefit of already owning the stock. So after getting exercised, what you can do is basically, you're going to own $100 of this. I mean, 100 shares of the stock. You're going to own 100 shares of the stock. Let me put it. Let me show y'all a different example. So as you can see, as you guys can see right here, right now I'm in Jumia. I am $89 down. I mean, it's no big deal. But basically, just let's assume that I got exercised. I mean, obviously I have 1,000 shares of it, and just ignore that. Just see that I got 100. But essentially, once you
And
get
Eduardo, as you're checking or saying stuff, if you're willing to just share real quick what things mean for those that watch this who like have no like investing background, like what does exercise mean? Like what is whatever? Like what does that mean? That'd be helpful for a lot of the younger guys for sure.
Okay, got it. Yeah. So exercise, like I covered before, basically all that entails is that you're basically getting an option. If you were to Google search what a put option is, it will literally tell you what it is, or it'll tell you exactly what it means. So I mean, as you can see right here, a put option is a financial market derivative instrument. Just ignore that. I mean, it's just fancy term for, let me find a more dumbed down, like a more basic explanation. Um, let's see. Yeah, there you go, right here. Just read that portion right here. So basically, what a put option does, just any contract in general or any options play, it call or put, all it entails is it's 100 shares per contract, and a put option simply allows you to buy the given security or the shares at that certain strike price. And because you're doing, cash covered, basically what cash covered means is that you have enough cash to cover, in the event that the option gets exercised. So in the event that the option gets exercised, all that means is that you have to buy 100 shares of the security, because that's what the option entails. So for a put option, if you get exercised, like I was explaining before, let's say I sell this one and it sells, it sells, and when it sells, it's in the money. And just for you guys who, I mean, obviously, I don't know if you guys are familiar with this, but if it's in the money, it will be here in the blue, and if it's out the money, it would be in the black for this whole platforms, but in particular. And so what the objective is that you want to sell out the money, and the reason why you want to sell out the money is because you don't want to get exercise. You just want to collect, passive income. You want to collect premium. And by doing so, not only will you get it, if you do happen to get exercise, like I explained before, I would love to get Jumia at, as I mean, you can see the lines that I have drawn here. But the volume analysis, from what I've seen, there's a good level of support right here. I would love to get it at $26. So in the event it ever falls that far, all I can do is simply keep selling them over and over again. And if it ever drops that low, then boom, I get, 100 shares. I get 100 shares of the stock, at $100. And so did was that do you got any questions on that, Kathy?
Yeah,
Or
no, I don't.
Mhm.
I just, so for you, and by the way, you're going super detailed, which is great. And those who want to dive deeper can dive deeper. We don't have to keep going with this
Mhm.
as much, but just to show what you've been doing in terms of, looking like, can you walk through, if somebody wanted to start from scratch, the process of what you've been doing, where you're like looking up stocks, looking up, researching companies? Like, what's been the process of you taking your money from $2,500 to $50,000 over the last, year and a couple months? Like, how did you start? What did you do? So more like overview, like
Mhm.
bird's eye view of like steps of what you've done. And then obviously, like, I mean, I know that we're gonna do some stuff with you just because I'm busy with other things, and like, there is some research obviously that needs to go into this,
Mhm.
right? Like knowing about
Yeah.
companies, knowing about trends, knowing about their patterns, ideally for a couple decades, and looking at patterns, for older companies, right? If they're newer companies, that's, whatever research we have currently, but there's definitely research involved. You don't want to just buy
Mhm.
companies without researching it. So that's what I want to say of like, what did you do? I started looking at companies, I researched them, I found out trends. So just, for someone who's not touched this before,
Mhm.
just simple layman's term, like what were the steps you took to get yourself here?
Okay. Yeah, so essentially, basically, all how I started. So investing
You
wise,
can stop, yeah, stop screen share. So
okay.
we can go back there, but go ahead.
Yeah, so investing wise, basically, all I did was, let me see. So the importance of being in the market is not only do you want to have, like, how do I say? Not only do you want to have a long-term portfolio, but you also want to have, just, because I am a trader, I do have both kind of portfolios. And something that I do encourage on everybody doing is opening a Roth IRA. For those of you guys that are not familiar with that, basically all it is that, you can actually deposit $6,000 a year. It is capped, but any profit that you do make from that Roth IRA is actually tax-free income by the age of, 59 and a half. So, I can, start putting in there, I can start putting money in there by right now since I'm 19. And, once I'm, by the time I'm like way, obviously about to be retired, I'm going to have my fair share in there. And any profits that you make on that account are going to be tax free. And so that's something that I highly encourage everybody doing just to begin with. I just wanted to get that out the way, just so you guys know in advance. But basically, how it goes when it comes to just researching companies is you want to keep up with the trends. So right now there has been a very over the past like I'd say like 6 months, there's been, just a really big trend when it comes to EVs. And for those of you guys that don't know what EVs stand for, it's just electric vehicles. And so basically a lot of electric vehicle manufacturers or just electric vehicle companies have been booming, even though
Just their numbers don't really back up what it is. It doesn't really back up their valuation. And that's why a lot of analysts have been saying that Tesla's overvalued. Um, but I'm not gonna get into that. In my opinion, it's actually, reasonably priced, but I'm not gonna get into that. Essentially, how I begin researching is, again, you want to keep up with the trends. So let's say you just decide to search up, upcoming electric vehicle manufacturers. Let me go and share that real quick. Let me see. Share my screen. So let's say we just want to research upcoming electric vehicle. Oh shoot. So, and then obviously, it gives you a long list of cars. That's it. Let's see. Okay, so it gives you a list of what's coming is being come out. Electric vehicle. Let me see. Companies. Let's switch the terms. Okay. And then obviously, I mean, this is a time-consuming process. I'll be honest with you. And until it is that you know what it is that you want to find for, or like the specific kind of market that you want to invest in. So if you want to invest, let's say in China, because right now I will say if you are looking for electric vehicles or just investing in electric vehicles in general, China is the biggest, market when it comes to electric vehicles. And so, you'll see a bunch of articles, you can just click on them, start reading them, and then slowly, as you become more versed and just the topic in general and the competitors that, are just, I guess, develop or in the space or in the competition space in general, then you'll be able to identify, okay, so it's like, then you'll start being able to narrow it. Oh, okay. Then you'll be able to narrow it down further and just being able to just identify which companies it is that are the strongest. And so right now what I'm looking at is Xpeng. Just this is from my own research. This one and Neo, like I told you guys before, the one that we were just that we were covering the options wheel on. Xpeng, if you go look, you can search up Xpeng. What do you call it? Earnings call. You can search up earnings call. In the earnings call, I mean, this is, farther down in the line when you actually understand what these numbers mean. Now, but basically, once you understand the company's fundamentals, in the earnings calls is where you're going to find a lot of the information that it is that, you're going to need. You're going to need to know. That way you can be able to understand whether or not that they're in a good space. So one, just be able to expand. How much capital, their current liabilities, just their price to sales ratio, their earnings, per share ratio, and just being able to identify and compare the numbers between the companies to see which one is, set on a better trajectory. And so one of the biggest and most common examples is looking at Blink versus, I believe it was SPE. Here, hold on, let me look at this. Yeah, okay. So one of the big ones, and you guys can take it as an example. It's the ticker symbol SPE versus Blink. You guys can go to YouTube. There's a lot of YouTube videos that do a lot of this. I guess you'd say they cover a lot of what it is. The differences between each one of the stocks. And YouTube is very helpful, I will say. No, but you want to be careful because a lot of the guys, you don't know. There's been a lot of, I guess you'd say, frauds on the internet, just saying that they know this or they know that, and so you definitely want to be careful because if you do get into like YouTube or anything like that, you want to definitely take the time to just simply cover multiple videos, be able to jot down what those videos say, and then just compare it versus one another. And if anything seems reoccurring, then it's probably because it's likely true. And then obviously, you want to do your own due diligence because if you do your own due diligence, if you do your own research, then you'll be able to confirm what things are true and what things are just, I guess what sources are actually reliable. And so a couple of the guys that I do love when it comes to just, if you guys would like to, oh, no, that's not what I meant to do. A couple of the guys that I do love watching, or just, for anything in general, Meet Kevin is one of the big guys that, in my opinion, he is like one of the best on YouTube when it comes to just, anything he really does. The guy knows his stuff. He does really in-depth research, which is what I love about him. And he actually he does a very good job at explaining them. And so it's just he breaks it down in such a manner where it's just so simple. And he covers, not only does he cover stocks, he also covers real estate. And I mean, just so you can get, I guess, an idea of, this guy's caliber. This guy, he's 28 years old and he has a net worth of over $28 million. And he started from nothing. He's an immigrant from Germany. No, the guy's awesome. The guy knows his stuff. I mean, that's just what I'm going to put it, to begin with. He is one of the guys that I definitely do get a lot of my news updates from, because you do want to be like just up to date with your news. Because if there is something around the corner, you don't want to be caught off guard. Basically, is how I'm gonna put it. And if you do end up getting caught like on a downturn on the market, I will definitely say this: do not panic sell, because more likely than not, with time, the market's gonna recover, and you're gonna be back, to where your money's gonna be back, and then it's gonna be back, and even bigger than before. That's basically what the big mistake that a lot of people did during the just let me search it for you guys. That's the mistake that a lot of people did with a lot of people did with the economic downturn of COVID, because if you can see, if I can zoom out for you guys, basically what happened is, for the people that were in the market, obviously, you had this, I believe it tells you right here, it's 221. So it's February 21st. That's basically when we saw the market just jump off a cliff. And so for those people that just, decided that they saw their 401ks, they saw their, just their retirement accounts dwindle and just slowly, well, not slowly, they were abruptly bleed out, and then just decided, okay, I'm out. I'm gonna just take or salvage whatever I get or whatever I have off of my retirement. They made the big mistake, because that was at 339 when it at the very peak, and then 218 at the bottom. It was 218 at the low. But if you would have waited a couple months, I mean, as you can see up here, we're at 369 already, and that's well over, a lot higher than what it was, initially, even pre, COVID levels. And so it just comes to show you how, if you do get caught on a downturn, um, again, just hold it out and fight it through. I mean, don't get me wrong, it will hurt to see those red days, because I've seen them before, trust me. But it's nothing. It's nothing that I guess the economy is not going to shake off, with time. Because the good thing about the U.S. stock market exchange is that most companies, or just everything in general, tends to be bullish. And for those of you guys that don't know what bullish means, all it means is that, it's over on average, over like a 20-year time span, it does grant, it always goes up, essentially, just to put it in layman's terms. But as far as research comes, again, like I mentioned, I apologize for digressing, but as far as research comes, what you do want to do is essentially, like I said before, just search a certain space that you're interested in investing in. Whether it's, renewable energy, batteries, marijuana, whatever it is that again, are interested in investing. I will say marijuana is not the best if you're not if you're not well versed in the company. Highly suggest you stay away from it, because those companies are, how do I put it? They're intricate with their numbers, and a lot of the times they come out to be false. and you can see your accounts go to zero with time. I'm just gonna put it in short like that. But again, just focus on what it is that you wanna, I guess you'd say, pursue, or something that you're interested in investing. And something that I was, super interested in investing is in emerging markets. So emerging markets, again, you can just Google search, emerging markets throughout the world. And this is actually how it came about finding Jumia. I told you about Jumia, Kathy, just by finding emerging markets throughout the world, because that's basically where, that's where the biggest potential is to be had. There are the biggest risks in those involved in those markets. But I mean, as you can see, Brazil, Russia, China, India, and that's where the biggest, how do I say, the biggest growth is to be had. And so again, you just, after doing so, after finding the markets that you're interested in, you want to narrow it down. So something that I was really looking forward or looking into was just e-commerce in emerging markets. Oh, shoot. And obviously, you can read the articles. I do take a couple hours out of my day usually just to read the articles to see what they have to say, or if there's anything new that I'm not just, I guess you'd say, informed about. E-commerce and emerging markets. And then this is when I found out, I still haven't finished the document. I need to go look at it in my other computer. But I actually built a document comparing the big four, I guess you'd say, e-commerce, how do I say, e-commerce companies throughout the world. And one big thing, when it came down to this, after being able to analyze and just, I guess you'd say, narrowing it down to a name of a company that I want to specifically research, then I want to go, obviously, like with Zoomia, you can go online and search up their website and just, oh, not Zoomia, Jumia, sorry. And, again, just read what's on their websites, browse what it is that they have to offer. And then after doing so, you can be able to just, step 3 part of it. So let me just backstep a little bit. I'll summarize the first steps. So step 1 is basically gauge your interest on what it is or what kind of markets that it is that you're interested in investing, or just things that naturally appeal to you. So whether, again, like I said, it's batteries, renewable energy, anything of that sort, just gauge your interest, or at least identify what it is that you're interested in. And step 2 would simply to be able to identify the marketplace that they're in, whether it's in the US, China, Asia, South America, Africa, it doesn't matter. I personally like to look at, again, like I told you guys, is emerging markets, because that's where the biggest growth is to be had. And Jumia is definitely one of them. And after that, step 3, which takes us to step 3. Step 3 is basically, being able to identify the whole, like, the market consumption of the specific marketplace. So market consumption of, like, let's say, because Jumia is based in Africa, so you can be able to, oh, that's not what I meant to do. But you can go there, but again, there's more articles on it. If you want to just dumb it down, honestly, the easiest way to do it is just do Africa GDP. That's incorrect. Oh wait, no, the nominal. Okay, there you go. See, so as you can see, this accounts for the whole market of Africa, like the entire market, its entirety. If you go look and just definitely, if you specifically look into like a specific portion of it, so let's say Africa GDP consumption, or consumer. There you go. That's what it is. Consumer. yeah, so you'll be able to get your numbers. And so by just being able to research such things, you'll be able to identify, what markets are having or seeing the biggest growth. And from what I've seen from my research in Africa's consumer sector, this is close. This is close. But in the overall e-commerce and just overall just the business aspect, for Africa, for example, just so you guys get an example, for Zumia, what they're located in is a $4 trillion kind of market. So that was step three, just being able to identify what it is, the market that they're located in. I know for South America in the e-commerce space, it's $4.4 trillion. In Africa, it's 4 trillion. In China, it was oh wait, I don't remember off the top of my head. I would have to check my notes for that. But each and every single one has their market share or market opportunity to be had, and which leads me to step four, which is basically identifying the kind of the market share of the company that it is that you're researching. And I will say some companies don't say what the percentage of market share that they have. Um, some companies don't say, but other companies do. And if you do, if you just you have to dig really deeply into their, how do I say, and into their earnings reports, and they're usually like 50-page documents just detailing everything. You have to look at a lot of numbers, I will say. So it is definitely time consuming. But for example, if you were to research on Tesla, if you go look at their earnings report, now they've actually consistently held a market share for all electric vehicles, throughout the world. Their market share is about 18%. And they're looking at, obviously, if you look at, if you've seen videos from Elon Musk, he wants to raise that bar for them. So again, step three was identify the market or the total market. I guess you'd say, I wouldn't say capacity, but the total market in which, how big the market is relatively, like, money wise. And step five would just be to identify their market share, like their current market share. And then step six would just be to simply just go on Google and look at their market cap. So Jumia. Wait, oh, okay. Let me see. Is that okay? Let me pull up the stock instead. Oh. So if you pull up the stock of the company, if you go and see where it says market cap right here, it will tell you at what price the company is valued at. And then by comparing by comparing their market share, and then by looking at their market cap in comparison to the total, how do I say, the total market in their sector that they're trying to obtain, you can be able to identify how big it is that the company can possibly grow. And those are basically the 6 steps in which that I take, when it comes to identifying what companies that I'm looking to invest in. If you guys would like any just guidance when it comes to that, basically how it works is in specific. Oh, okay, all right, thank you. And specifically the companies that I'm already looking at investing in, because I've done my, it's time consuming. I will say steps 2, 3, and 4, and I would say even 5 actually take a very long time. They do take a very long time. Let me see. So let me just go ahead and put you guys on some details in particular. Oh. Let me put you guys on some details on some stocks. Oh wait, hold on. This is my watch list. So already off the bat, I don't know if you guys have anything to write with or just type. But these are companies that I'm looking for in the future, and I'll just give you like off the top of my head because I do have whole research documents on my other computer about them. But just off the top of my head, I will tell you what it is that, you know, the potential that there is to be seen. And if you guys want to do any more research on them, by all means, go ahead and do it. But first things first, Planeteer. Planeteer, in my opinion, it recently IPO'd. You know, as you can see, it had a very exponential growth. It did IPO at $8, and it did see highs of up to 33. But basically, Planetary Technologies, if you go and just research them online, oh shoot. Obviously you can see their just by looking at their how do I say just by looking at their competitors, you can be able to identify what it is that they're doing. So they actually do software. They're one of the ones that they're a little bit speculative, I will say. I haven't this one in particular, I know it does software and they were doing software in partnership with Amazon. So that was one big thing which drew my attention to the company. So I am gonna do my, again, I still have to do my research on that one specifically. Shift Technologies. Okay, this one I actually have done quite some research on. So this one is a used car company. This one is basically it's paved its road to be able to compete with Carvana, which if you guys are not, familiar with the company, Carvana is actually, it's basically the biggest, online used cars, I guess you'd say used car company, out there in the entire world. And, Carvana, just so you guys can be able to identify or like what it is exactly, just to gauge, the, how do I say, the comparison between the two, Carvana is valued at a $41.76 billion market cap. And the thing about Carvana is that they're actually priced at whatchamacallit? They're priced at about a 10 times earnings multiple, which is absolutely insane. I would definitely won't suggest you guys, investing in this company because it's a little hefty. It is expensive. While on the other hand, from my research, like I've told you guys, Shift is actually at about a 1.3 to 1.4-ish earnings multiple right now. So it's actually pretty undervalued. And the company, their market cap is 440, as you can see right here, I have my cursor over it. It's $443 million. So it is a small company. It is a small company. There is definitely a lot for it to do still. But when it comes to just customer satisfaction, no, they actually come in with about, I think off the top of my head, it was about anywhere between 7 and 8 stars. Whereas Carvana actually comes in with a little bit over, not over, it comes in with like around 5 to 6, which, they basically build their business model around customer satisfaction and the customer experience. I've looked into it. I've seen a couple of videos of guys going through the entire process just so that I can see how like customer friendly it is. And the experience is, it is a very good one. And so this is a company that I can easily see myself, within like 3 to 5 years, I would say you can easily get anywhere between like, 3 to 5 times your money on this company specifically. So that was Shift Technologies. It is ticker symbol SFT. I'm just gonna cover a few. I'm not gonna take too long doing this. WWR. This one is highly speculative. I would definitely say it is highly speculative. So if you do decide to invest, how do I say, a pretty penny into this company, I'd be careful. I've looked into them. Basically, all it is that they're one of those companies that just so happens to have bought. They just so happen to have bought. Whatchamacallit? They just so happen to bought two, like, it's, to put it in some. It's basically a mining company, specifically for lithium ion. and they just so happen to have bought two warehouses or two operation centers that are located near two factories that are, in proximity to Tesla's, factories. And given the track record of Tesla, where Tesla tends to, how do I say, it tends to basically buy out anything lithium ion or just anything battery related. They tend to buy those companies that like it's candy. This one is basically highly speculative in the sense that, one, they're not profitable yet. On their books, they're not profitable. They're actually burning through a lot of cash, which is, obviously it's one reason why I haven't put anything into them yet. If anything, I'd like to get them at a deal first, and then possibly I'll consider it. Maybe around anything underneath, the I think it was the $5 range is good. Yeah, and anything underneath the $5 range, I would consider. But basically, it's projected. If we've seen the track record on it, anything that Tesla buys. So, like, let me just give you an example real quick. This one right here, Piedmont Lithium, Tesla didn't buy them, but Tesla did renew a contract with them. And as you can see, I mean, you can already see where it took place. It's pretty obvious. The company was trading at about $6, and then within a day or two, it literally ran up all the way to 54 and 50 cents. So it literally went from $7, or like I think it was like $5 and some change actually. $5 and some change all the way. It's basically a 10x over the span of like 2 days. I remember watching the stock. This stock it went crazy. But I mean that's basically what a lot of people, or from what I've been reading, a lot of people are betting on that. And in my opinion, it's not something that I want to just bet my odds on, because you never know. It can happen, and it could also just never happen, and you could just slowly see your returns die away. But that's Westwater. It's WWR is the ticker symbol. And then Jumia, it's one of my favorites. I would cover it with you guys, but basically all it is that they have no competition. They're e-commerce based out of Africa. I'll just say a couple things about them. In my opinion, they're a solid investment. In the short term, basically they have no competitors. They're actually the only company in Africa that does e-commerce. Their market share that they can obtain is up to $4 trillion. That's the total consumption rate over there. When it comes to just people or companies that are near or like Jumia, in similarity wise, is Mercado Libre. So Mercado Libre is basically the Amazon of South America, and Jumia is basically the Amazon is basically the Amazon of Africa. Sorry. And as you can see here, Mercado Libre is actually $68.31 billion. That's their market cap right now. And the Amazon of China is, for those of you that know, is Alibaba. Alibaba comes in at a whopping 721 billion. So obviously there's a lot of business to be had in this kind of sector. And this is one of the companies that I'm super, how do I say, super excited about. And I can easily see myself, getting anywhere between 10, 20, or even 30x my money within like 5 to 10 years on this company specifically. And their year-over-year revenue growth, I believe, was a little over 108%. And they're projecting, I forgot, they recently did a public share offering, so it's actually at a discount right now. And the public share offering was just they can be able to. They basically sold their shares, which dilutes their shares, which is bad. But they did that in order to just raise capital, because they want to be able to get their hands, just be able to expand a lot faster. It's every company does that. There's nothing wrong with that. And in my opinion, it was actually a good move, because on my long portfolio, I actually got it at a discount.
And that's Was someone asking a question?
I didn't hear anything. Did somebody
Okay.
ask one?
I just heard like a background noise. So, question for you: if somebody like, I know there's going to definitely be people that see this and they're like, "Oh my gosh, can I pay you $100 to invest some, $500 for me and like just do it however you think is best, and they can just pay
Uh-huh.
you." Like, are you open to someone paying you a fee, or if it's a bigger amount, and I can help you structure some stuff,
Mm,
like in terms of like, because we've had people like just provide service for like people for the division, or like it isn't like a big
mm,
legal thing, it's like my dad. He does
yeah.
accounting for anyone. He'll do your taxes for $100. If you're a branch, he'll do it for $150.
Mm.
So just like a service to help our Cutco family. But is that something that you're willing to do at all? And we can look at it case by case, or you and I can sit down and look at that.
Yeah, so I do, what do you call it? I actually do have a little side business on that already. So yes, I would be open to that. Because I do offer, for anyone who's just looking for like just, long term, not any kind of like day trade. Day trading is a whole different beast, I will say. It did take me a while to actually get good at. But when it comes to just the financial advice, just when it comes to the stock market in general, I do have my own little, I guess you'd say, side hustle, on that right now. So yes, I would definitely be open to doing that.
Okay, cool.
Mhm.
Because I think that that would be something that some people might be excited about. So, and we'll see. Now, we don't have a bunch of people here live, so I don't know like what questions they had. I mean, I don't really
Mhm.
have many questions. I wanted this to be more of a resource, and just like for
Yeah.
anyone who did, if they either can start learning themselves, or people that maybe they don't want to put the time, or they're doing other stuff, but
Mhm.
instead of them spending stupid money at the bar and then continuing to lose money, it's better they pay
Mhm.
you and you make them more money.
Mhm.
So that's what I just wanted to see, so we could get a plan with that. And then I just wanted to see what other investments you were looking at aside from the
Mhm.
stock market, which it sounds like
Okay.
you said you were looking at real estate stuff. And because I wanted to,
Mhm.
see also if you want to see some of the deals that, we have and we're looking at, but just curious as to what other things you were looking at, currently, like things that you were interested in investing into.
Mhm. Yeah, so one of the things that I definitely was interested in looking at, and this will probably be something that I definitely dedicate a lot of my time to next year, assuming that the market, or the housing market in general just, goes on a decline. Let me see. Okay. Yeah, so that it goes on a decline. And so um something that you can do if you don't have a lot of, or if you're just interested in obtaining like a property, I know plenty of you guys have heard this term. It's called house hacking. And there's different ways in which you can actually be able to obtain a house. There's a conventional loan side. There's the FHA loan side where you can just put 3% down on a house and just be able to obtain it. But there are some prerequisites with that that you have to do. And something that I definitely was looking into was just being able to get a rental properties, specifically wedge deals, because the wedge deals are the ones that you have the most profit to be able to develop. And then at the same time, it's just, how do I put it? Because if you have a house that has a wedge deal, not only um when you buy the house, so let me put numbers that way. I think it will make more sense if I put numbers down. So with a wedge deal, let's say you have a house that could easily sell for like 150,000, but you somehow, and you end up getting lucky and you buy, or let's drop it down, just to keep it simple. Let's say you have a house that's like 115 and you buy it for 100. And so once you buy it for 100, you can easily spend, 10, 20,000, getting the house remodeled, and then just basically going back to the bank and getting a professional appraiser to reappraise your house. And then by doing so, you can actually refinance that house. That way you can be able to get a whole, like, I guess the wedge that you built on your deal, you'd actually be able to cash out on that sort of wedge. And then by getting that renewed capital, I can go into specific details if you want me to. I'm just going like, I guess, really broad terms.
Yeah,
But
that's fine.
basically how it is just, you know, how do I put it? Yeah, so, you know, so you buy it for 100, you know, it's worth 115. You spend, you know, 10, let's say 10, or let's say 20, just to be, you know, I guess just to put numbers down, just to be even. So your initial investment on the house, let's say you put the down payment, let's say you put a 20% down payment, which is 20K, and then you put another 20K in renovations. So your total out-of-pocket cost is 40K. If you were to just, you know, again, if you get it reappraised, you can easily get a house reappraised as long as you do it properly. Because I have been looking into a lot of like property management and just being able to identify what it is that, you know, if you do fix them up, instead of doing like, how do I say, instead of doing just lipstick adjustments, like things that actually raise the property's value rather than just pointlessly spending your money and your time. Because every day that you do last without, you know, not having a renter in the house is, you know, a day that you're losing money. And then this also comes at an expense for, I forgot the term of it. I forgot. I don't remember the term. I will come back to that if I do remember.
Hmm.
But basically, you know, it's 40K out of pocket. You know, if you get it refinanced, let's say you do get it, you say you get it appraised from a professional appraiser, you know, pay him 150 bucks, not a lot. You know, get it professionally reappraised, and you get it professionally reappraised for like 150 or like 165. And then by doing so, you can take it back to the bank that gave you your first mortgage. You can take it back to the bank, get it refinanced, possibly even negotiate the how do I say, negotiate the percent or the interest payments that you have to make, negotiate that, and then by getting the refinance, they'll give you a new loan, a new mortgage loan, or a new mortgage, which will cover your old mortgage. But by having your new mortgage, either A, you can take that capital and reinvest it into another house, or B, just simply have it as equity in the property that you already have. Because if you
Hmm.
get is if you get the, what do you call it? If you get refinanced, and the let's say the bank gives you a 165K. Well, I mean, you only paid for the house. You only paid 100, and but you really only did 40K out of pocket. But let's say, you know, again, your first mortgage for the house was for 100K, but now you have a new mortgage which is 165K. So you can use that 165K to cover that 100K, and that means that the difference, which is 65, is money for you to keep. You know, aside from, you know, the down payment and, you know, like that. And then that's money that you can just, you know, rinse and repeat and do it on a cycle. But I
Right.
would be a little bit, how do I say? I'd be a little bit careful because you don't want to stretch yourself too thin to the point where, let's say you don't, if you're not able to get a renter in the house to help you pay pay for the mortgage, then I mean you're not looking too good, you know. But obviously there's there's things to everything.
Hmm.
Hmm.
Cool. So you're looking at real estate stuff. Anything else that you're looking at, like that you're saving cash flow or that you're excited about investing into?
Yeah, so the last thing I would say is I'm actually looking into, again, like I said before, emerging markets. Specifically like for, especially for like Africa or even South America. Just being able to start something like online related, just like an online business, sort of like a Shopify store, or maybe even like sort of like drop shipping. I don't know. I mean, I know most of you guys are probably seeing like an advertisement or two about it. But doing that in the emerging markets, because, you know, like in the US and like in China, it's so saturated. Um,
Hmm.
I feel like doing that, opening a business like that in like one of the emerging markets and just, you know, getting good at that is actually something that would pay off, you know, immensely in the future. And that's something that I'm actually looking into and just being able to become well versed in. Because if I'm able to do that, you know, that's, you know, again, another income stream that I can have, you know, providing for myself. And I know it's a big one because I've seen, there's a guy on YouTube. His name, he's actually 19. He's 19 years old as well. um, the kid's name is Bahiza, Bihiza. I don't know how to. It's Biaheza, I believe, off the top of my head. I mean,
Mm-hmm.
the kid's 19. I think his net worth is like, or from what I've seen, I don't know how much money the guy has. I mean, he has a lot of money though. He's I think it's like $1.5 million ish.
Nice.
I know he has a $1 million stock portfolio. I don't know about and I know he has one rental property and he's looking to get a second one. I didn't think he had that much money, but once I saw his like upcoming, I mean, he posted a video about it. I mean, if you can see, he was making like anywhere between like 300 to like $500,000 a month on, his store or whatever that he had on Shopify when Shopify first came out. He was making, I mean, I think at the age of like 17, 18, he was making enough money to the point where he actually got in legal trouble and he had to hire a CPA agent, to basically cover, like, it
Phoenix
was basically
books.
a big, it was a big like taxes and like, okay, this kid's 17 or he's 8 or like he's underage. It was a whole mess. But basically, I mean, it's just there's a big opportunity to be had, especially in like markets like that are yet to be developed. Is basically all I'm gonna say. That's the
Mm-hmm.
third investment that I'm definitely looking into. When it comes to just those are overall the three. I don't know if you have any yourself that you're looking at right now.
Yeah, I just like I every week I just look at the deals. I mean, I want to I want to get an Airbnb down in Galveston. I would like to go into like a bigger like multi-family, but really many doors, like an apartment complex. Something that has a lot of doors so that there's always money coming in, even if they're not all filled, you know?
Mm,
So I'd like to, yeah, we're looking at some stuff with real estate. And then, my friend just told me about like what they're doing in Utah, in Reno. I mean, with in Reno, Nevada, with the boutique and distillery that's connected to the casino. I definitely
mm,
want to go in on that. And then just looking to see like what comes our way, and making sure that, you know, I want to make sure that 80% of the money that we have right now sitting is working,
mm,
and not just sitting idly. So whether it's bigger investments or just little things, and even a savings account, I would say to anyone listening, like find, like, if you're going to have money sitting in an account, like there's higher, like, Discover, I think, has one that it's almost 1%, it's like 0.7 or zero point 0.8 versus like less than 0.001, at your bank
mm,
account. So like, like get a
mm,
higher, get one that there's some that are 1 or 1.5% savings account, like interest bearing. So put money, there, and then yeah, just keep working it. So but yeah, I'm every week I'm looking at stuff that comes through, but I know right now I'm definitely wanting to just continuing creating more cash flow and holding on to cash and putting cash where it's like easy to take out. Like if we did stuff in the stock market, like that's cool. And then I can, put bigger chunks into deals that come our way. So, but I'll definitely share stuff, with you that is coming our way. And then I definitely we can talk offline. Demonica, did you have any questions since you're on here live?
Yeah, I do actually. So, do you mind like giving your contact information? I just started like investing into stocks like right when Corona hit, but I'm still kind of doing my own research. So, thank you for the information. But just like if I have any questions along the way with like my current stocks that I have right now. Oh,
okay.
I see.
Yeah, so I put my phone number on the chat box. If not, I'll go through on the group and I'll just put my phone number there if you guys have any questions. No, anything I do, I did want to say though, Kathy, um, I would if I personally what I'm looking into is like duplex or triplex. I wouldn't go as far as fourplex because I think once you go past four, it's actually considered a commercial property.
Yeah,
And with
I do
commercial
want I
property,
do want commercial real estate as well.
oh, you want commercial? Okay, so because I personally wouldn't want to do commercial, simply because it requires you to put down a significantly larger down payment.
Yep.
And what I want to do is I just want to be able to have my hand in as many cookie jars as possible.
Right. Well, when we go into commercial or bigger things, we do
Uh,
syndications. So there's like a
okay.
group of people going in on it. So we
Mm,
all have a cut of it, but no one's putting in big bucks on their own. We do it in groups.
gotcha. Yeah, because
Yeah.
that's something that I personally don't. Because technically, usually what happens is that commercial real estate is usually not at like they're usually again I'll say usually is not priced at like very, I guess you'd say they're not at like discounts as like homes might be. They're not at a discount like homes might be. Just one last thing that I do want to just say for everybody that's, again, listening out there or ends up watching this. If you are 18 years old, which I assume, most of you guys are, definitely highly suggest you go ahead and open, get a credit card, basically.
Mm-hmm.
The sooner the better. It's going to allow you to build up your credit history, and then that way, when you do want to be able to make investments, when you do want to be able to, get a house or do whatever it is that you want to have, just in mind, you'll be able to bargain with the bank on getting a better interest or just getting a better deal on anything that it is that you're doing. And trust me,
Yeah.
it will save you a lot of money. Like I'm 19 and I have 5 credit cards. I don't use them all. You don't need to use them all. I do have my one specific one that is my favorite. It's my Discover. It's my Discover credit card that gives me 1% unlimited cash back and like 5% on select things like Apple Store, Amazon. Highly suggest just use a credit card and again just I would
Pay it
go.
each month. So this is the important thing. So
Yeah.
if you guys study or look at, um you look at Dave Ramsey, he's anti. He's like, don't get credit cards, cut them all up, rip them all up. And I understand why, because of how Americans live their lives. And so you're not getting it to rack up debt. You're getting it, you're actually playing the system. You're playing them if you do it right. That's the goal. So get a credit card to improve your credit and to get all the perks and benefits and 1% back and all that. But that only happens if you're actually making your payments every month. Because if you're then having interest, then you're doing like there's no point, Like, I mean, you want to build credit, but like if you're not making your payments, if you're accruing all these interests, you actually end up paying more. So you want to be very careful and have a plan and have an alarm that each month you're making sure, like, spend what you have in your checking. Like that's how I did for years, and I built my credit up super quick. And even my ex had screwed my credit back in the day, and it was like, oh my gosh, in like the 500s, and then I popped it up to like 780 within 2 years, just like using my credit card for everything and making a payment 2 weeks later on everything. Just like I paid everything on my credit card, and then I would transfer the money from my checking over. So like I never bought things on my credit cards. I didn't have the money in my checking. I just bought it to get the points and to like improve and then pay it, so they could see like that payment history and bump my credit back up, So there's a way to do that, and you want to be careful with it. That's all.
Yeah, and then after you get your credit cards, just, if you do want to save yourself some more money and get yourself some free trips, I highly suggest you guys look into like credit card churning. That's something I'm actually looking to, well, not looking to get into. Oh, I'm about to start doing once I have just more income in general. But credit
Is
card churning
doing
will
what?
give you credit card churning is what it's called.
Uh-huh.
I mean, you can search it on YouTube. There's a lot of guys that cover it. It's actually it saves you a lot of money. Like if you go out on your trips, you get yourself your free plane or your free flights, even sometimes even free vacations. Just depending on how you do it. Because every single credit card has like denominations or like incentives in which you can just, I guess you can say apply for the credit card. I remember there's one on Capital One where it's like the first, $1,500 you spend on the card, they give you like $300 back. And if you think about it, it's like you can just use that card for any traditional expense you were already planning on doing,
Mm-hmm.
and you're getting free money back. And it's something really simple, but a lot of people don't do it. And that's something that I highly suggest you guys just look into. Just that way you can become well versed when it comes to credit cards and how to use them.
Mm-hmm.
Awesome. Awesome. Any other questions, Monica?
No, not at the moment.
Okay. Well, Eduardo, I really appreciate you taking your time out. I know I'm going to share this. People wanted to be on this. And anyone who's listening to this, I encourage you guys, it is a good thing to pay people who've done their research and professionals. And obviously, Eduardo isn't like a seasoned professional, but he's pretty damn smart, knows his shit. And I'll tell you, I'm the division manager and I'm going to be giving him some money to play with because I'm busy and I'm not going to be diving into all the stock stuff. So, but I know that he knows his shit and I wouldn't just give my money to anyone. So I'm very selective and I have some pretty kick-ass professionals. But in terms of day-to-day stock and day trading, like I just haven't done it. I mean, yes, I do have, my team does. I have money invested in the stock market, Spencer and I, our financial planner has that, but just like, it's more general. It's like, oh, we're just going to put it in a wide, they press a button and it's general. It's not specific companies, right? It's index funds and other stuff. It's not specific companies that we see growing, emerging markets and all this. So I just share that because I'm going to be having him, um, uh, invest some money for us. And I'll encourage you guys. It's worth paying someone and learning from them. So like if you're paying Eduardo to teach you financial stuff and like help you start your investing, it's smart to do that. But while he's doing it, learn it from him, like get better. Like it's like you're paying for school, all right, but you're paying someone who's already done the research and you're paying them to coach you and to help you, make more money, and that's definitely worthwhile. So I just want to say that, but thank you, Eduardo, for taking time to do this, and super super awesome to see what you've been doing and the time that you've put in, and definitely going to pay itself, and you're setting yourself up very nicely for the future. So you guys have a kick-ass opportunity here to make a lot of cash quickly, which a lot of people don't have a chance to do, right? Like even like out of college students, like don't typically make 30 grand in a year, and we have people earning that here in a summer. College kids typically don't make 100 grand a year. They don't make six-figure incomes. Even college graduates, it takes them a lot of time to make a six-figure income. And we have students earning that in a fall semester. We had Francisco make 100 grand last December while he was a student at HBU, and I just say, you guys have, we, with Vector, with Cutco, we have a cash cow. You guys can make a lot of money here and put it to work, put it to work. And that's what I love. And so when people say, well, oh, well, can I make more? Can I do? I'm like, the goal is not to get a job you work forever. The goal is to get cash that you can put so that money works for you, and then you create time and space for yourself. So anyway, big props to you, dude, already on that path and getting that done. Super exciting, and super excited to see our division, one of my goals. And I was excited to have this call because one of my big goals is like to build that division that people look to go like, oh, this person or these people, like they all are loaded, like they all own homes, they all have $1 million plus net worth. Like I want to be that division that people point to, that it's not like, oh, all these guys made six-figure incomes and they spent it all on stupid shit, but they're actually building their portfolios. And unfortunately, like it's fun to have a lot of money. We work with a lot of young people and a lot of people that don't know what to do with their money. And we have too many people that make six figures in this business year after year after year and have nothing to show for it. And you don't want to be one of those people. Again, you have an incredible opportunity to make cash. So get educated and start investing, so that you can set yourself up for your future. Because I don't know anywhere that you can get a job where you can earn the amount you can here at this age, like, and have the support system that you guys have here. So anyway, with that, I wish you guys a great rest of your day, whatever day of the week it is for you. And Eduardo, thank you again so much, hon.
Yeah, thank you.
Yeah, no worries. Kathy, one last thing.
Mm-hmm.
I don't know what ETFs you guys are investing in, but if you guys are investing in ETFs, highly suggest you guys look into ARK Invest. They average anywhere between, I think, I forgot off the top of my head the exact number, but it's around like 30%. Your traditional, your S&P 500 or like your Vanguard that pays dividends and all that stuff. They give you like 7% every single year, like out on average. But ARK Invest averages anywhere between they're really credible. Like they have a lot of credibility behind them. They
Who are you
average
saying?
ARK Invest. It's ARK
Mm-hmm.
Invest. And they
Well,
average for people that just like slow and just, those guys, they do a lot of research. They know their shit. And they average on, I think I forgot off the top of my head. You can Google search it, but I think it's like a little over 30%
oh yeah, I mean, oh no, I've got
yearly.
great people. I trust them with what they're
Uh,
doing. I haven't even
okay.
looked at it. And that's what I
Yeah.
always want to get trustworthy people. Like Adam Stock and his team, like they do all the investments for us. And so they're in that front. But like I like to diversify. I want different groups. I want my hand in different things. So yeah. But thank you. And I think for others they can look at that as well. But yeah, I'm gonna, we'll keep doing stuff with them, and then I also want to do stuff on our own as well. So, but we'll check that out and look into that. So, awesome. Well, I've got to get ready. I've got a church event I have to leave for in 15 minutes. So, I will
Okay.
see you guys. See you.
All right. See you. Y'all take care.
Bye.